Good morning, good morning. Hey Cisco, hey Joe. Aloha, Mother Truck, what's going on, Banir? How you doing? How's everybody doing this morning? Well, here we go into the end of the week. They're right back where we started. We had our month-end markup. Liquidation, another markup, and now we're just right back to where we were. Hey everyone, hey GoldenEye, how you doing? Ian, Alexander, Moran. It's the same thing over and over and over again in this market. I think once people understand the concept of how this, you know, sort of works, it gets a bit easier. Now, execution's always, never an easy thing, but I'm going to show you guys on this 4-hour chart. For larger traders, if you just take the look below and fail trades, look below and fail, look below and fail, look below and fail, you can make some pretty good money just on a 4-hour chart. If you have a large account, say you're going long 68.60, stop 54, and then put your sell orders out, man, there's 20 points right there, right? Big traders look below and fail of 66.60, rotation all the way back up to 54. Now, I know this is hindsight, but this stuff is proven. You guys have been with me for 5 years who have seen this happen over and over and over again. And, let's just be honest here. The trades are based on the fact that you have a business reason to take the trade, right? So when you have a business reason to take the trade, and then once you learn how to do the look below and fail, you can do it of a level. You just have to manage your risk, you know? So when you manage your risk on these trades, it's a different story than when you're just spitballing or whatever the hell it is you guys do. You have a business reason to get into the trade. You have a business reason to get out of the trade. What is the business reason to get out of a trade? There's two words, right? Your trade is a business transaction. You've either acquired inventory or you've shorted inventory. So there's two words, and you guys should know, you should tattoo this on your forehead. Backwards, of course, so when you look in the mirror, it actually looks the right way. But you all should have this tattooed on your forehead. Mispriced inventory. If I'm long 68.60 and the market offers at 68.40, just as an example, I have made an error in judgment in pricing my inventory. I've acquired it 20 points too high. What is a smart thing to do when your inventory is mispriced? You guys hate when I ask questions, right? Get out. Exactly. You got to get out. I want you guys to think about something. I know people are not deep thinkers. One day I'm praying that they will be. I want you to think about, you know, if you, this is the only business where you can insure your business transactions. Do you guys ever think about that? This is the only business where you can put $1,000 at risk and get, you know, 80% of it back if the poop hits the fan. This is the only business. It's very hard to insure business transactions. You buy something and you try and sell it. There's no stop, right? Say I buy 1,000 TVs from China and try and retail them out. I don't have a stop. Think about that. I want you to start thinking and being smart when you trade, not emotional, right? Emotional traders are people who haven't thought things through. It's really that simple. And the reason that you're getting emotional and you need a psychiatrist and going through trader worksheets and all of that sort of thing is because you don't know what you're doing in the business and you haven't thought it through. If you think it through, right? Well, how can you have rules if you don't know what the fuck you're doing? Excuse my language. If you're completely clueless as to the business that you're trying to make money in, how in God's name are you going to make any money? That's like asking a surgeon to do surgery who's never taken human anatomy. Right? Or a mechanic to fix an engine and they've never taken an engine apart. Hey, Raj, what's going on? Right? So, instead of having these black and white rules of what to do in trading, how about use that thing that sits on top of your shoulders a little bit? Hmm? I know it's painful. We don't use it very often. Think. So, business reason for a trade, business reason to stay with a trade, right? Yeah, that requires effort. And that is why nobody makes money trading, right? It's very difficult to get people to think. Impossible almost. So we have a completely inside day here. We had a little look below and fail down here of the previous day low, all the way right back up. Oh, we're above 68.64. That's one good thing there. I've got balance levels on the 1 minute from 80 to 86, double them to 98, double them down to, where are we? 68. VWAP 75, I think, right? So here is that trade on a smaller time frame. And this is what you want to do, look below and fail. So you're buying it here, you put your stop here, sell a little here, sell a little here, right? Right? It's the only thing you can do. Your trades have to make business sense. Let's see. Overnight inventory is pretty long now. Let's see if we can correct it. J period came down, corrected, couldn't take out the F and H lows here. Sellers are right up here. I'm just saying, folks. I'm trying to get you guys to do a little thinking before you do some trading. It will be helpful. Not only will it help you make money, but it'll also help you from blowing up accounts and all that stuff. How do you choose the stops? You should know where you're. Great question. Good question, Joe. How do you know where your stop should be? Well, first of all, you got to practice putting trades in so you know your software intimately, inside and out. Just like, you see those movies where the guy in the army can take apart and put his gun together blindfolded. You ever see that? That's how you should be with your trading software. You should know where the buttons are. If I tell you right now 68, 88 bid, 87 stop, your order should be in already by the time I finish my sentence. If I say 68, 85 bid, 84 stop, you should have your orders in. By the time I finish speaking, those orders should be in. If you can't put your orders in that quickly, you should not be putting money at risk in this market. You guys understand what I'm saying? If I bark out a trade, you should be able to execute it before I finish my sentence. Hey Jerry, how you doing? Right? You guys are putting money at risk. You have to have you should have skill. You need to develop your skill. This money's not just going to fall in your lap, right? No matter what these idiots on the internet say, you know. It's you got to develop your skill. So, Joe, how do you choose the stops when it goes through fast like it does? You should know where you have stocked out your trade. I'm going to talk about this a little bit. Most people, when it comes time to take their trade, are like a deer in the headlights. Ooh, what do I do? What do I do? Right now, do you see how the market's correcting inventory? So right now, you should be stocking out a trade, right? You know where your cost basis is, right? Let's think through this step by step. Let's go step by step by step. You know your cost basis is down here, right? You're in distribution and you're on sale, back to cost basis. What is the trade that you're looking for? You're looking for a look below and fail. So you're ready for that trade. So when the market looks below or fails to look below, you can go long, put your stop underneath 86 and take the trade back up. If it stalls here, give it a second. Watch. So if it does a look below and fail of 86 and you buy 87 when it gets back up, if it goes green, blue, back to green, you buy 87, put your stop at 86, put your sell orders out at 88, 89, 90, 91. So you're ready for the trade. You know exactly where you're going to put your orders before it even happens. Does that make sense? That's why you're supposed to be patient and wait for your setup so you can prepare yourself for battle. Otherwise, right, you're just fumbling around in the dark. Now, I put this in a video a couple of weeks ago, and I was talking to people, and they were asking me this question over and over again. Now, Joe, you're new. That's okay. But I had other people going, well, JJ, when this happens, I'm like, didn't you watch the video? Yeah, I watched the video. How many times did you watch the video? Oh, once, but I was cooking a lasagna and mowing the lawn and washing dishes at the time when I was watching your video. That ain't gonna work. If you're short, you're looking for 83. You have to watch them over and over and over again. The problem is that you guys have never worked in the industry, so and then you don't want me to do multiple videos, so I do them all in one shot. There's a lot of crap in there. You got to dig and dig and dig and dig, rewind, make notes, rewind, make notes. But that's what you want to do if you need to be successful. Now, I know I'm preaching, but if you want to just do this as, oh, I tried macrame and then I tried golfing and then I tried day trading and next is scuba diving. That's cool. That's cool. There's nothing wrong with that. If you want to do a little trading and then maybe learn how to, cook Italian food or, it's like a hobby, right? You're just farting around. That's okay. You don't have to take it seriously. But if you want to make money, all of those people who want to quit their job and trade, Jesus, please don't. Do not quit your job because this is going to be the hardest job you ever take. Right? Do not quit your job. Right? Learn how to trade while you still have an income. Right? And even then, don't quit your job because you are going to make some dumbass mistakes because of pressure. Exactly. Ian. See, now it's setting up for the look below and fail. It's found a bid here, right? So let's zone in on this. Okay. You know that there's going to be a seller here, right? And you know there's going to be a seller here at the top of those candles. So now you have to determine, is the price action fast enough that if I go long over 86, what are my chances to get to 89? You see how I'm thinking this through? Right. Now, when you're starting out and you're sim trading, you need to take that trade on sim. Take the trade on sim and see how it works. Because what that's going to do is that's going to give you experience. Right? You're going to need experience. You need to experience what it is. And not all the time by watching you can't experience until you get your hands dirty a little bit. See? See how it came up? And there's sellers right there at the top of that candle. See? Right here. That's why you're waiting. You're waiting to find out where the seller is. That's why you're patient, because you know that there's a seller there. So why would you go long if you're going to hit a wall? Right? So you want to clear that level and get up into the meat of this before you even think about going long. And it's moving so slow now, you can watch it as it's coming up. Watch how it trades here. So say you go long at 86 and a half, 86 and 3/4 on this candle. Put your stop at the bottom of these candles, Joe. Right there. Okay, because that's the kind of range that you're in right now. If it breaks that range, your inventory is mispriced. at this time. See? And you'll get stopped out, right? But you got to learn. Now, you've got 3 candles with the exact same low. So that's a little bit of a clue. Let's see if that bid holds, right? And get used to being wrong. Get used to scratching your trades. You know, there, you see, it took it. Now you would have scratched, so your risk is minimal, right? See, the reason why I read not to get into soon is because I'm always too soon, Ian. The reason I'm always too soon is because I was trained to be fast. In my day, if you don't get trades done in 30 seconds or less, you're fired, right? And these are phone trades where you're calling a market maker and executing an order, right? Not a sales trader, because if you call a sales trader, he needs to relay the order to the market maker. So you need a direct line to the market maker. Otherwise, if your client misses an order and he's out $2, $3, $4, $500,000, this is not going to end well for you, right? So usually how, in the old days, how you trade is you pick up the phone and you go trading and your client barks out an order. Buy 200,000, blah, 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 limit, blah, right? And he's holding on the other end of the phone. You hit the other line. You got 2 phones in your hand. You hit the other line, call Citadel, right? And you need to be a good enough client that you don't get the sales trader, because then he's got to relay the order, and that takes an extra 20, 30 seconds, right? 20, 30 seconds is the end of the world, right? Now it's even worse. It's like a decade now in today's fast markets. So you call this trader, the trader starts inputting the order. While the trader is inputting the order, and excuse my language, I'm going to swear, your client is on the other end of the phone screaming, "Where's my fucking fill?" This happens 300 times a day. Okay? That's what trading is. So there's an urgency to getting this shit done. Know what I mean? You can't be just sitting around with your thumb up here, right? You got to get in there and transact quickly. That's why I'm always too quick. So that's why I figured out, if I had gone long here and I knew that there was a seller there, I don't need to go long here. I can wait, right? Now Cisco is short because he sees the seller, the seller, the seller, the seller, the seller. And he can stay short. There's the overnight POC at 83, just like we said before. Right? Do you guys get why you have to be quick? Don't fall for these people who tell you to trade at your own speed. Your own speed doesn't mean anything. Okay? It's like the market doesn't care about your speed. Now, the most important reason is you got to be patient, and then you've got to be able to get out of bad trades quickly. Right? That's why we want you to be quick. That's why we want you to train yourself so you're like, bid, stop, order gets executed, put your sell order out. Your sell order is not being executed. Nobody wants to buy your product at that price. Lower the price instantly. Right? Once you learn how to do that, things are going to get a lot better for you. It's going to be very frustrating. You know, I was speaking to someone yesterday and she said, "This is really frustrating. I might stop trading futures." I'm like, "No, you got to push past it. It's going to be frustrating." This is one of those endeavors where you just don't start. It's like, I've never seen a trading prodigy where somebody just sits in front of the screen who's never traded and starts making money. They'll get lucky here and there, but they'll give it all back, right? Like during the COVID thing, that big push up, everybody looks like a genius in a bull market, right? Then the structure of the market changes and everybody just loses all their dough. And they don't even know, like say you make 100 grand, right? Just by just luck, right? People don't even know that you should not lose more than 10 of it. You should take that you should take that 100 grand and get it the hell out of your trading account so your ego doesn't get its hands on it. Right? People who want to grow accounts but don't have the skill, they are a target. See you, Jerry. Check in later, right? So we had a little inventory correction in K, happened a little late. Usually J period corrects inventory. Now K, let's see if we can get down and take out the overnight point of control in these lower stops. A true inventory correction will bring us right down to the close, right? All the way down here. Hey, AZS, what's going on? See how it's kind of going a little sideways here? Right at the cost basis. That's how markets work. You acquire supply, you go sell it, put it on sale, and you come right back to cost basis. If you got to put it on deep sale, you put it on sale underneath cost basis. That's why we do these levels. I do. I have a volume point of control and I have a time point of control because it takes time to distribute or acquire volume. Right? You should only have enough money in for you to trade. You should never keep, and the other thing is never keep too much money at a brokerage house. Right? I don't trust them. I know it's SIPC and everything like that, but let's see if we could take out that low at 82. We've got two-sided markets now, so don't be surprised if we take out these stops and come down to yesterday's point of control, which is down here at 78. Yeah. And that's the other thing. If you make, if say you make $1,000 that week, get it the hell out of your account before you lose it the next week. Trade for income. Don't trade for glory. You know, trade for income. Be practical about it, right? You're practical about other things in your life. You don't gamble your house away, right? What if you use prime brokers? Well, that's a bit of a different story, AO. That's institutional trading. How much money do you have under management? I mean, I'm talking for retail traders, right? You want to talk institutional stuff, you really should. If you have a prime brokerage account, your money management skills should be top notch, right? Yes? No? Right? I mean, this lecture is for people who are just starting to trade, that kind of thing. I mean, if you've got a prime brokerage account, you know, you've got a fund, looking for 80, 68, 80. You have what? Minimum capital, $500,000, right? but you need 50 to 100 for meaningful trading benefits, right? So if you're trading $500,000, if you're trading $100 million, you should know what the hell you're doing. Okay. Yeah. So for people who are wondering, a prime brokerage account is a brokerage account for hedge funds, high net worth individuals, right? Family offices, right? And you don't pay commissions per trade. You negotiate your commissions at the beginning of the year. Uh, you know, most of them want you to maintain a regulatory net capital of 1.5 million. Um, you know, they take you to dinner. You get a Rolex at Christmas time, stuff like that. How can you tell if the market has made its low or its high using volume profile? You can't. But I can show you an easier way, Animal Hustles. All you got to do is watch the candles, right? So, how can you tell if the market has made its low or its high? Well, we do it a little differently here. Say we're looking for this to be its low, right? Time. Time lets you know whether the market has made its low or its high, and it depends on what time frame. Is it a daily time frame? Is it a 4 hour time frame? Is it a half an hour time frame? Is it a 5 minute time frame? Is it a 1 minute time frame? Here it's making its low before 68.80 because they're front running that level. So say you wanted to go long and you were a fast trader, you'd be long here in the 82s, 81s. You'd put your stop at the bottom of those candles and sell into that strength. So that's why we use the look below and fail. Because when the market looks below a level, Animal Hustle, and then fails and comes back up, it means the sell orders are done underneath a certain level. You have to think about it as orders. Right? The market came down to say, let's just use 68.81. Okay? Hang on. We're going to draw a line. Right? You with me? Okay. How do you tell? You don't need volume profile. You use a candle chart. It looks below, comes back up. So they say there are 1,000 contracts for sale, 500, 300, 200, 100, then they're done. That order is complete. The market now rotates back up. So it looked below and came back up over 81, so you know that the low is in and you can take a long when it comes back up over that level. That's all you need. You don't need to overcomplicate it with volume profile. Volume profile just tells you where you can anticipate a bid, right? Because volume profile is cost basis. So if there's a cost basis here, and then you go and sell and come back to that cost basis, you can anticipate the cost basis being here. If you don't know what cost basis is, it means this is how much you paid for your crap. Yeah, when the sellers compete, that's why you stock a level when it looks below and fails, right? And you always look for the edge. Don't look for this, look for this. The level gives you an area of interest red because of cost basis. Everything is everything in this business is cost basis, inventory, and cost basis. Why? Because it's a market. You'll never ever hear anybody on CNBC or Bloomberg or any of these places, they'll never talk about cost basis. They'll never talk about inventory, right? They'll make up all sorts of crap. They never talk about what really moves a market. So, what moves a market? Inventory. Inventory is priced, right? I bought 1,000 apples, right? Or even if I grew 1,000 apples, there's a price, a cost for me to get that inventory, right? Then you take it and you try and sell it for a profit. That's what business is, right? I keep saying right because I keep asking. No one's frickin' answering me. Wake up! So, order flow are clients, customers. Okay? Order flow is a fancy ass way of saying people coming in the store. Okay? So when people come in the store, if I have inventory, I sell it to them at a profit. If they start walking out of the store, I get a lower price and chase them into the parking lot and give them a better deal. Savvy? Get it? That's what markets are. That's why they call it a market, not the stock hot tub. Okay? What's the goal of it? The goal of a market is to move inventory. Not for you to make money. The goal of the market is for people who invest in companies for them to get their money the hell out of it. That's what the market's for. It's to move my investment off to some retail dude, right? I bought 5 million shares of a stock at 10 cents. It goes public at $5. You guys come running in to buy it, and we're selling it to you, right? Now, here's the second thing. He who has the lowest cost basis has won. The lower the price of your goods, the more freedom you have to sell them wherever the hell you want. So if my ES contracts are priced at 73, I can sell them at 88, I can sell them at 83, I can sell them at 82. I don't care. But if you're buying them at 82 and I'm selling them to you at 82 and I paid 73 for them, that's why you better damn sure know where the inventory is priced before you go into a trade, right? There you go. It's much easier selling paper than trading. I've done both, right? It's much easier picking up the phone and saying sell 50,000 shares at $2 and get a wire the next day. That is a lot easier than trying to figure this stuff out. That's why retail trading is really hard. Now, when you do deals, you have a whole nother set of complexities because you have to manage CEOs. CEOs never tell the truth. Financiers and CEOs are always hiding things from each other. There's always somebody in the soup. There's always, some kind of a problem, right? There's always drama. But that's why you're making millions of dollars doing deals, because you have to manage all those idiots, right? And make them, right? And I'm talking Canada. I'm Dave. I'm not, don't, don't get, but generally the deals, smaller deals, you've got a lot of people who are fighting and arguing because the greed factor is insane. So when you're taking companies public, you've got to manage all that. I got this deal up in Canada, and I told them a year and a half ago, where they were going to have trouble, and they went and did it anyway, right? And now they're like, what do we do? That's, there's no difference than that in retail trading, right? In the mentality of people, right? Because people are people, right? You know? Yeah, so what we do is we watch. You see now, Fred, as we coming down to that 81, watch it. Right? This is why you got to watch markets instead of trading markets. Because if you don't watch markets, you won't understand how they work. See, there's 81. There is no look below and fail yet. Maybe there's a look below and fail of 80 because this is the bottom of our balance zone. Let's see. Right? The way this thing is selling off, I'd like to see if it could get down to VWAP. Right? Otherwise, it's just going to bounce around between 80 and 86. Nice work, Cisco. Nice work. Great way to make some money on that inventory correction short. Beautiful. Look below and fail traders, you're waiting. Currently, we are in an environment where there are a lot of competition by sellers and we can have unexpected moves to the downside. Uh, we're always in that environment, Fred. This market is what we call a very speculative market, so you can have unexpected moves to the up and downside if you're not aware of market structure. Is this a look below and fail of 80? Not yet. It's still looking. It hasn't failed yet. For me, Animal Hustle, I would wait to go long until it gets over 81. Then you've cleared out the suckers. Right now, the market's trying to find that bottom, right? Remember how you were saying, how do we know where the bottom is, right? Well, the market's trying to find it. Just let the large traders work this area out, okay? Much better just to let them work it out. And when they do, like say if you were thinking of going long and it gets over 81, well, where's your next seller? Your next seller is going to be here, right? At the top of that candle. See? So it's kind of grindy. All the inventory's above. Now, if a big buy order comes in, it could shoot all the way up to 86 real quick. But there's going to be some sellers because people got hit on the way down. Do you know what hit on the way down is? So as Cisco was short and the market traded down from 68.89 to 86 to 85 to 84, dealers had to take in inventory. They had to buy. If they didn't, the market would have gone from 89 to like 72 in just 2 seconds. So inventories of traders get hit on the way down, and those have to be cleaned up before the market can go back up. So you can think of shelves are full. right? Shelves at 86, 85, 84. We got to clean those shelves out. The only way they'll lift their offer if they see big buyers. This is actually a very interesting situation right here because we're just hovering above VWAP. We're hovering above the point of control from yesterday is 78 volume wise. VWAP is 76 and change. What do I think about 68.30? I don't know. I haven't thought about it at all, my friend. Won't know till we get there. Why is that special for you? Here we go. There's the point of control from yesterday at 78. What's a liquidity wall? Is that like a Velcro wall? I don't know. I really don't know. I don't know what a liquidity wall is. Where do you guys get these terms? It's absolutely adorable. A liquidity wall. That's the first one. Okay. Resting limit orders. They just walked up the mountain. They're having a smoke. Okay. I don't know. I have no clue. I mean, 68, you know what 68.30 is? And I'll tell you why those orders are there if you really want to know. You really want to know? You got a poor low at 68.30. That's why the shorts are bid there, right? So even without nose map, book map, fart map, all that crap, you got a poor low. That means buyers are competing. It's feng shui to have a liquidity wall? Oh, okay. I better get with the program, man. Is that like shag carpet? Okay. You know what I'm thinking of? Has anybody ever seen the movie Get Him to the Greek? You guys seen that movie Get Him to the Greek? No one? Where he's petting the wall? What was that wall made out of? It was 2010. It was a fur wall, wasn't it? It was shag carpet on the wall. Right? So I'm thinking he's petting the liquidity wall. Oh man. Yeah, no, there's see TPO will tell you very quickly that there's a short position right underneath there. That's why you'll see all those bids. Yeah, no kidding, eh, Dave? It's good. It's good. It keeps me awake though. I mean, that's the other thing. When you guys are sleepy, the guys from YouTube, you know, they're bringing up the rear with liquidity walls and I don't know, maybe they'll have. Yeah, if trading doesn't work out for me, I'm going to be a liquidity wall installer. Exactly, Raj. The bids are there because of FIFO. Oh, that's good. So I don't mean to make fun of you. I don't know where you guys get these terms. Yeah. Well, you got down to the POC. We got a lift. Sorry, now that is a look below and fail. Sorry, see, I started doing my stand-up comedy routine and then I lost the liquidity wall. and I completely ignored the look below and fail. So that's not bad. There's a look below and fail. And this is a tough trade. Now, when you start trading, you need to take this trade a couple of times, get stopped out, and then just keep at it. And then you'll understand that it took a little longer, right? It took 7 minutes for the thing to actually work. That's why you got to wait until we clear that seller. Sometimes you'll miss the trade, right? What time frame do I look at? I do the same thing every day. Uh, Pranjal. I I look at daily time frame and then I zoom in. I'm a short-term trader. I trade very quick. I like to make 3 to 5 points on 8 to 10 minis. That's my typical trade. So had I been concentrating instead of farting around, right, we would have been going long here in the 82s and then putting sell orders out. It's a little bit slow tonight, so let's see if we can get back up to 86. First to make sure the wall is level. You're really taking this all the way out there, aren't you, Cisco? Right. Any tips you can give to increase the probability of a look below and fail setup? Definitely. How much time do you spend observing markets, replaying charts, making notes, all the boring crap? Do the boring grunt work. The probability of your success will increase, right? They're going to be different look below and fails. This one took a little bit of time. In a faster market, it'll go bing, hit the bid, and go like that. Sometimes it does like this forever and there's no trade. You have to be able to distinguish between the types of price action and your type of business. I always use stops. I very rarely reverse my position. The only time for me to reverse my position, Snowflake, is if I am insanely dialed in, right? That reverse button on the DOM is like steal my money button because what it does is it market orders you out and then it market orders you into another position. So you're getting it on both, you're getting hooped on both ways, in and out on fills. The other thing is I use my stops to tell me, stops are two things. Stops are insurance on your business transaction. They also give you information on whether you're trading too early, whether you've got the right spot. It tells you when you get stopped out, there's 86 to the tick. Um, you know, that is information. So when I get stopped out, I'll take a look and see why I got stopped out, right? No problem, Alexander. Don't worry that my POC and everything is different than yours. I have 3 different versions of Sierra tied to 3 different accounts, and even on the same data, the POC will be at different places. Okay, so don't freak out about that. Rhythmic, CQG, Denali, they will all have different POCs. They'll all move at the same time. The reason, and I learned this, is they don't get they the data comes from the exchange. These providers do some sort of database aggregation, I don't know, math crap, and then give it to us, right? Whereas in equities, the data is piped from the exchange to us. There's no intermediary. That's why in futures trading, you have totally different POCs for totally. And sometimes, like I'll have two data feeds and they'll have the different POC, like two versions of Sierra open. Let me see where the other one is here on the other account. Doo, doo, doo. Yeah, see on one of mine, it's got the pocket 6882, and this one is 6883 for the overnight POC, right? So same data feed, two different accounts, POCs off by a point. Weird, huh? Yeah, just relax. Nice work, Cisco. Yeah, if you get take a long and get stopped out, then it's better to wait for that second push because we might have cleaned out more sellers after the second push. You see, this back and forth motion is like a washing machine. The more you do this, the more people you flush out. You're taking this and you're flushing it out here. And eventually you can do that. Nice work, Badir. Nice work. Look above and fail of 86. So if you're short 85, stop 86, 87, covering 81. Right? So look below and fail. Look above and fail. Short, stop, cover 1, cover 2, cover 3. There you go, Badir. Nice work. Nice, nice, nice. Good. So, folks, if you want to learn how to trade without all the double talk, right, in a simple manner, get good information from our AI, which has been programmed to give you proper information, not just some crap that they've gotten from the internet, from people who claim that they've been kidnapped by market makers, right? Come, come visit us at the Trading Syndicate, right? We will teach you how to earn a living, and we will also teach you how not to blow up your account. Right? If you're interested in that, please reach out to us. Okay? I'm JJ. Thank you so much for being with us. And we'll see everybody at 9 o'clock. Right? Thanks very much. Have a great morning, everyone. Bye for now.